love that question because it's like I could talk for an hour on what's the real estate market doing, because each city, each MSA is really different.
Sarah is the founder of Sugo Capital with over $260 million in assets under management. She's an expert in passive income investing and loves educating others about real estate investing. She's a contributing member to the Forbes Real Estate Council. Welcome, Sarah, to Real Estate Hacking Live.
Great to be here. Thanks for having me, Ben and Chris.
How you doing, Sarah?
I'm doing great. Thanks. Great to see you.
You too. Yeah. So we first got connected. I saw you speak at I forget what the event was called. Fun Watch Live in Vegas, and actually just got back from Vegas. And then you had some roundtables, and really enjoyed your conversation. So I know you've been in the game a while. You're an operator as well as an investor in the real estate space. So I thought you'd have some unique perspective here. Where do you think the real estate market is going? And you can break it out over, so obviously the next 12 months, that's one viewpoint, but also in multifamily, which you're in, long term is pretty important. So like the next 3 to 5 years.
Yes, I think that's a great question. And that's the number one question I'm getting right now is, what is the real estate market going to do in the next 12 months to 5 years? And the thing is, in the US, there's not a real estate market, right? And you know this, and I want to make sure everyone listening knows this. There's not a real estate market in the United States. So different kinds of real estate are in different stages of the market cycle. So single family home cycles are not the same as multifamily real estate cycles, are not the same as, commercial mixed use. Right. So everything has a different cycle where it's a good time to buy or a good time to sell or a good time to hold. And so I want everyone to think about this because, I've learned about all different kinds of real estate investing so that when it's the right time to do this asset class, I can do that asset class. When it's the right time to do this other thing, I can do that other thing. And I also want to call out that each location in the United States is really different. And so, for instance, when the real estate market in Houston is doing something, the real estate market in San Francisco is doing something else, and they're not doing the same thing. So for instance, Phoenix, we all know what was going on in Phoenix. If you're a real estate investor over the last couple of years, it was like the place to be, the hot market, like everyone was just screaming to get in there. And now the reports are coming out that it's like, it's the number one place for rental decline in the United States, these sort of things. While Houston, the rental rates are going up 12, 16% per year. So Phoenix and Houston not doing the same thing. So it's really important when you're an investor. So it's really different from, the last person you had who was speaking about when you're buying your home, you're spending money on real estate because of you personally, your emotions, where you want to live. When you're investing, it should be totally not correlated with where you want to live.
That's the best part of it.
Yeah, you don't have to live there if it's investment property, whether it's an Airbnb or a single family home rental that you have, or duplexes, or if you're in something passive like a REIT or a multifamily syndication, which is what I do. Those are 100% passive. So it doesn't matter where they are. Someone else is operating it for you. And so you're going to look at the markets that are still performing really strong, given what's going on in the rest of the United States, right? So there's data you can look at that's relative data, and then there's absolute data. So like unemployment rate, you're going to want to look at relative data. What's the unemployment rate in Houston versus the rest of the United States? That tells you where people are going, where the jobs are going. And so supply is going up, but not as fast as demand is going up. So that's a great place to have product. So I love that question because it's like I could talk for an hour on what's the real estate market doing, because each city, each MSA is really different. And so I live in California. I live in San Francisco. I will not buy investment property in California, but I'm all over Texas. I'm all over Alabama. I'm all over the Carolinas. There's other really great markets, and so you got to look at all that kind of stuff, and you look at job trends to know which is really influenced by local government and incentives that they're giving and those sort of things in order to see where people are migrating to And especially right now, migration happens really fast, right? So we saw that in moving companies put out this data, like what's number one ingress, number one egress cities. So you can see, okay, number one place everyone's moving to, number one place everyone's leaving. So you know where to buy and sell.
Yeah, and two interesting facts there is the long-term trend of like 2010 to 2020 was away from the coasts, more to the Sun Belt area and mountain region. But then a 1-year time period from 2020 to 2021, it's like everything 10x. And if you look at the macro, like West, it lost residents. It was like a negative, I think it was like 144,000 or so.
Exactly.
But if you peel off the West Coast and leave the mountain region, they gained like 200,000 residents. And I'm sure it's a lot of folks moving from California to Nevada, Utah, or whatever. It's close enough to good weather, and maybe a little bit better on the lifestyle or something. But yeah, it definitely matters. Have you followed new constructions? It seems to be when we're low inventory, demand is softening a little bit, but still high. And that's just because of interest rates. But ultimately, we still have really, really low inventory. And the one thing that I've noticed lately is single family construction has pulled back hard, but multifamily construction way behind still, but picking up steam. They're at a 50-year high. Now that's, I don't know if that's good or bad, because we need more housing. But I don't know if you looked at that or if you follow that trend.
Yes, so we always look at that. So for instance, we bought some property in Huntsville, Alabama. And so you can just call the local government and say, how many units have you approved to come on market in which timeframes? And so they had a period of time where they were not allowing new builds on the apartment buildings. So we bought there because we're like, it's one of the number one places of job growth, and the local government has not approved any new builds.
Yeah,
so if
no new competition.
Yeah, right. Even if you buy something that's not that great, which is what we bought, it's like the demand, and we're going to make it better, right? But the demand is so strong for it, and that creates a larger area of demand because people are going to commute in. But so now they approved new housing projects. So stuff is going to come online, but then we watch, when is it going to come online? Because it takes a while to build a 200-unit apartment building. So sometimes it takes about 2 years, and then you lease it up. It takes maybe 6 to 8 months to fully lease it up, get 200 families in there, and then about 2 years to stabilize it before you're going to sell it again. So when we're going into markets, we look at how many of those are going on in the area. So for instance, the corridor between Austin and San Antonio, 2 years ago, we were going to buy there. And then we looked at the number of new construction approved, and we're like, new construction is going to take over. And our sweet spot is buying existing apartments and making them nicer. So we didn't buy there, even though it's a great place for development for what we do. We were going to be competing with new stuff in, a matter of months. So we didn't buy there. So yes, I'm always looking at that when we're deciding where to buy. It's really important because it's simple supply and demand.
100%. I would imagine on a small scale, small term, some new inventory even helps existing units because you're bringing in Class A, which some of them won't necessarily rent at Class A because you're bringing in people. Yes. But some of that will spill down. But yeah, I mean, there's an absorption rate that has to be factored in, and yes. That trickles down.
Yes.
We got maybe 60 seconds here. Any other final thoughts on what's ahead for real estate or multifamily specifically?
Yes. So everyone knows this. When you make money in real estate, is on the buy. You want to buy low, sell high, right? And so even though you get cash flow on investment properties, you get most of it from capital gains. And so a lot of people are afraid to buy right now because prices are going down. But when prices are going down, that's when you want to buy. So even though interest rates are going up, we're negotiating price down and making purchases because it's going to shift in the future. With inflation, rent's going to go up. Those capital gains are going to be really strong on commercial real estate and especially in multifamily. So just keep that in mind. When prices go down, it's a good time to buy. which is what we're doing right now.
Yeah, and operators that they're doing proper due diligence and putting the risk tolerances in there. In the event that 2 years from now interest rates were to fall, that's a potential little extra like mini windfall that they can enjoy. But you've got to be careful there.
Yeah.
Well, thank you so much. It was a pleasure having you. Look forward to talking with you again soon.
Awesome. Thanks for having me, Chris. Nice to
Take
meet
care.
you, everyone listening.